Hey guys, what's going on, and welcome back to another video. My name's Dion, and today I'm going to be talking about my second week trying to do the Funded Trader Challenge. So I'm going to talk about a little bit about my results. I'm going to show you what's going on the dashboard. Let's look over the charts, have a look at any sort of potential trades which I'm thinking about taking, and let's just have a chat about that. So we'll head over to the dashboard so I can show you what's actually happening. Now, you can see it was going all right to start with, and then we took a big drop. So what actually happened during this big drop? Well, I had assessed the way that I was trading and realized that there were a few mistakes which I was making. The main one being the amount of leverage which I was using. Now, the risk which I was using across each trade, which was roughly like 0.25% or 0.5% if I wanted to add a little bit more sort of risk to it, right? Now, I realized that trading with this amount of risk is not gonna get me anywhere because I have a time frame to follow. I have to pass this challenge now, and I've got only 2 more weeks to sort of do this, and trading with a 0.25 or 0.5 risk is simply not gonna cut it. The profits which I'm making on big trades just are not enough, and for me to pass with 0.25 risk per trade, I need to be hitting very big trades consistently. So what I've decided to do is up my risk so that the trades which I do hit, I am making a decent amount of profit on it. Now, something else which let me down quite a bit was over managing my trades. Now, I did have a journal session yesterday, and I was pretty much talking about my trading, like what I thought was doing good, what I thought was doing bad. I was talking about my feelings and thoughts, the pressure that I have doing this challenge, because they got rules, time frames, loss limits, this and that. Now, I believe that this does affect us as traders, and it does add pressure. And pressure isn't the greatest to deal with when you are a trader, because you want to be as focused and as grounded as possible. So when you're feeling pressure, it generally stresses us, and when we have stress, we can't be as grounded and as focused as usual. Now, this leads to us having an imbalance of fear and greed. We end up taking trades we wouldn't usually take if we weren't stressed. We end up skipping trades because we're fearful of taking that loss. So pretty much after my entire journaling session, it came down to the 2 main issues of over managing my trades and using too small of a risk. So the reason why we've seen this pretty steep decline is because from this moment on, I started taking more risk. So this means that to lose because I'm down about 3%. If I was to use a 0.25 risk, I would need to lose like 12 trades in a row, something like that, to lose this amount. But now that I'm using high risk, which is roughly about 1% of my total account, it will only take about 3 trades for me to lose that 3%. So that's the reason for the incline. And how am I actually feeling about this? Like, am I stressed? Am I worrying that I'm going to lose this this challenge? Simply put it, no. Now, why? Because I know how I trade. I'm very confident in my trading abilities. After the journaling session, I've found out what's actually bringing me down, and I've found ways to sort of correct that, and I've found ways to work my way around these problems, which means that now my 2 of the major issues have been solved. So I've realized that I actually could have passed this challenge with 2 trades. I'll take you over to the charts and show you which ones. So pretty much I did have long positions from here, and I had short positions from here. So this is like my entire idea. I don't know if I posted it anywhere, but this is what I was thinking. I did expect this to happen. Now, I did see this pull up to, I think it was 21,600. So roughly to about there. Now, this was my trading idea before any of these movements had been playing out. And I did actually enter these positions, but because I risked a very small amount, I caught very good trades, but I did not make much profit at all. Not only that, I overmanaged these trades. I was taking profits here and there. I was moving things to break even. I was taking many trades. So all of that was pretty much everything which I could have done wrong. And the reason why I made these choices was because of that added pressure, because of not just the rules which the trading challenge has given to me, but because of personal life issues too. Like, Not everything's going to be perfect, and things that are happening in your personal life will affect the way you trade, because the principle is the same. If you have issues in your personal life, it's going to make you stressed. And if you're stressed, you're not focused and grounded, so that when you're on the charts, you're gonna be affected. Like, the stress will linger, your fear and greed is gonna be off balance. You're gonna be making choices which you usually wouldn't make. So to sum it up, I could have passed this challenge with these 2 trades, but I didn't, because I was over managing my trades and I did not risk enough. So moving forward, that's what I'm going to be working on. I'm going to be risking more, and I'm going to be managing my trades less. But not just that, I'm going to be managing my trades based on systematic rules, so that I don't really have to be thinking, and my choices won't be based on my emotions and thoughts. My choices, or the actions which I will take on the charts in regards to my trade management, will be based off a system, pretty much. So if this happens, then this action will be taken, so and so. It's just like the way I trade, like, we can't ever predict, like, or it's only going to go up or it's only going to go down. What we do as traders is we assess the entire scenario, the entire situation, and then we ask ourselves, if this happens, what do we do? If not, then what happens? And it's just all about this. And then we find the highest probability outcome, and then we follow the rules based on that particular scenario. So yeah, that's pretty much like everything's psychological related in regards to my trading over the past weeks. And now let's talk about future trades which I'm thinking about taking. Now, I can see that we're in this channel. Price had rallied. We had broken above this channel and come back down. This is a clear rejection. So what price is telling me now is that price could not break and hold above this trend line. So if it cannot hold the trend line, then more than likely, we're going to come back down to an area of liquidity or the bottom of the channel, which means my targets are set to this area here, roughly 19,300. So price is falling. We've had not fundamental news, but there's been a lot of news like Tesla selling off 75% of their BTC position. We've got the inflation hikes, or the inflation rate hikes. Inflation's getting higher. We've got, in about a week, a little bit more than a week, the announcement that's when we'll find out if we're in a recession or not. More than likely we are. Now, that's all bearish. In regards to on-chain analysis, the whales have not started actually accumulating yet. We've had a spike in retail accumulation, which is the cohort, which is usually wrong. Those are the only guys who are accumulating, and the rate of accumulation, I think, reached an all-time high. So retail was jumping in, and I feel it's because of this rally which we've seen in the market. It was a bull trap. It's getting people to be greedy. Retail jumped in. But the most profitable cohort, based on the history, is the whales. Now, the whales aren't buying, the whales are actually selling. So all of this put together is still giving me the short bias, which I've had for many weeks. I actually sold all my BTC and ETH when it was roughly like when BTC was in the low 40Ks. And I've had that has been my thoughts since then. I've been pretty bearish. Now, that doesn't mean I can't take longs. I will take longs if I see the appropriate opportunity present itself. But for now, I haven't really been given that opportunity. If the previous high is then broken and we see a shift in market structure, so we see a higher low above these trend lines, then I would like to take longs to my next key level, which is 28,000. I don't have it marked on the chart, I don't think. I do have it marked on the chart. So 28,000 is my next key area if we see market structure change to the upside. But for now, I'm looking for price to make its way back down to the lower key areas. So at the moment, I'm on the 4-hour time frame. Very comfortable time frame for me to look at. It's not too small, and it's not too large of a time frame. I really like the 1 hour to the 4 hour to do my analysis. So we've seen the clear rejection, and potentially we've seen some lows being taken out. So let's look a little bit deeper into this, and let's actually look for some trades together, like some trades which I would genuinely be taking, right? So we see these lows here in line with a high created by this candlestick over here. So I'll draw this line out. So I'm gonna use this as my support and resistance level. So now we've broken through what was a resistance, flipped into support, and now it is resistance again after not being able to maintain and hold these highs above the trend line. Everything that I have just described is bearish for me. So we'll go into smaller time frames in the 1 hour. Very clear break. Now, what I essentially would like to see price do is retrace into either an area of strong liquidity, which I will use the fixed range tool for. So let's see here. This red line is called the point of control, which is within the time frame and within the price range, which is highlighted. It will point out where the highest amount of volume is. So we can see yesterday's session. So this is covered in a 24-hour period. This is not based on trading sessions like New York, London, Asian, whatever. This is based on the 24-hour period. So yesterday's highest area of volume was right here. So I'm gonna mark that on the chart and make it red, just so that it's easy and clear to understand. And then we'll take off the indicator. I like to keep my charts as clean as possible, and I don't usually keep many key levels and this and that on. Only the key levels, trend lines, this and that I feel are relevant to the next trade, and that's all I do. So I'm gonna get rid of this upper range, like this this resistance, which forms the resistance of the channel, pretty much. So I'm gonna get rid of that, clear some clutter. So we've seen these lows get broken after not being able to maintain this high. Again, I'm gonna reiterate, I'm bearish because of this. So what am I looking for? One, like I mentioned, I'm looking for price to pull into an area of liquidity, an area of strong volume. So I could either be targeting this kind of setup. And in this case, I would like to take shorts from the rejection of the point of control with my stops above the last high, because that's my area of invalidation. If the last high is broken, like I did mention earlier, if the last high is broken and it sets us up for a change of market structure. That's not what I want to see if we're going low. Therefore, that's why this high is my area of invalidation, with my target set down to that level of roughly 19,300. Which will give us an approximate risk to reward ratio of about 1 to 7 risk to reward, which is not a bad trade. It's actually a pretty good one, but that's just one scenario. That's one if, right? Because that's only if price pulls up into the point of control, yesterday's highest area of volume, and if we see the rejection from there. Now, what's another thing that I could be looking for? I could be looking for price to pull into the last area of support and resistance, if that's how you'd like to trade, which will be this key level here. Because you can see this was a clear resistance, flipped into support, flipped back into resistance. Now, on the hourly time frame, I can only see one bearish candlestick, so we'll need to go into smaller time frames to assess this situation. And let's just chuck these indicators back on. So I don't see any point of control lined up with this, but the point of control of the current session we're in is subject to change. Now, the reason why that is because we're currently still in the session, which means as price continues to move, obviously there's going to be more orders placed, this and that, which means that the volume throughout the day may change. Because what if we do come back up to this area and it's an area of interest and we have lots of short sellers start putting on their positions? And if that's enough volume, this point of control will actually move down, like depending where the most volume is. So that's why I don't like to place my trades based on the current session's volume, because it is always subject to change. And this may be because of a news release, because of some sort of like FUD, whatever. That's why I like to use the previous day's point of control. It doesn't change. The volume has been set. That's where it is. And as you can see here on the smaller time frames, yesterday's point of control does line up nicely with some areas of resistance. So scenario 2 would be a pullback into this area. Hopefully see the point of control move down and see a strong rejection of that point of control. If we see that happen during the beginning of the London session, of course, that is a better indication to me that price will make its way down, because that's when the volume is going to start picking up, so and so. So that's the second scenario. We're going to move into the higher time frames again. Now, actually, I'll do this on the hourly. The third time frame. Now, I don't know what this is called, but this is something that I have been backtesting over the past few days. Is I would like to see price pull into the range of the candlestick, which moved into, how do I explain it? So pretty much if we're on this uptrend, right, we're making higher highs and higher lows. What I want to see is price from here, and this will make sense. I want to see price pull back into the area which we saw create the change of market structure. Now, let me try and break this down. I've never explained this on camera before, so I'm going to try my best. This is market structure right here. We have the resistance, which flipped into support, which flipped back into resistance. That's market structure, right? We've made highs above here. We're making higher highs, higher lows, but now we've broken through market structure. Now, which candlestick actually created the move which caused us to break market structure? So I would highlight this one here. Let me find the box. So this is the last swing high, and then we saw price pull down, which broke the last low. This is the move which created the break of market structure. So what I would like to see is the last bullish candle. So that would be this one here. This is the candle right here, which created the move which broke market structure. So what I would like to see in this third scenario is price to pull back into this range, which is here, this candlestick. And I would like to see a rejection from that area, because like this is where the volume, this is where the sellers like took control, because this is the candlestick which pushed up into an area which then sellers took control to then break market structure. So what I would like to see is price pull back into this area, reject it, and then that's where I'm taking shorts. I hope I explained it properly. I'm not exactly the best with explaining ideas. I don't know if you've picked that up watching my videos, but it is a little bit difficult for me to articulate the thoughts in my head, and I have been trying really hard recently to try and articulate my thoughts as clear as possible, because communication is key. If I know what I'm talking about, but I'm explaining it in a way which you cannot understand it, then it's not clear communication, and it's just not effective. Like, it doesn't do anything for anyone. So I want to change that. I want my thoughts to be communicated clearly so that you guys understand what I'm actually talking about, and so that you guys can actually use the information I'm giving you to help you out on the charts. So yeah, that's my third scenario, and that's essentially what I'm looking for. Like, we've got the break in structure. We've had price show us that it's failed to hold these highs. Therefore, I'm going to reiterate again, those are the two main reasons why I'm short-term bearish, right? So now it's just a matter of waiting. Which setup is going to get hit out of the three scenarios which I described? And which scenario is going to play out correctly? Like, are we going to see that rejection out of this zone which changed market structure? Are we going to see the clear rejection of this area once the point of control has moved down here? Like, is it going to play out the way we want it to play out? Because at the end of the day, we may see price pull back into yesterday's point of control, for example, right here, which actually lines up with the zone which I've drawn. We may see price pull into this area. We may see a rejection, and we may see a higher low form from here. Then that would change market structure, especially if we have a higher high being formed. So there's lots of different ifs and buts and this and that, but at the end of the day, I've already described to you the three scenarios which I'm looking to take. And this goes back into like why I actually stuffed up a lot of the trades at the beginning of the challenge. I would mark out these scenarios. I would think about how much I would like to risk, which would be the 1%. Now, 1% spread across three positions is roughly 0.33% risk across each position. And I would take these three positions. That's why on my funded trader account, you can see I've taken over 50 trades. If you know me personally, if I've talked to you about my trading, you know that I don't take more than anywhere like between 2 to 4 trades a week, 5 absolute max, because that would be like 1 trade per week one trade a day across each of the weekdays. That's the max amount of trades I'll be taking. So There's a lot to learn. I've learned so much. I didn't think I would actually learn this much taking the trading challenge, because in my head, I thought I had already learned a lot, and I had assumed I had assumed to be a consistently profitable trader, which I still do believe I am. But you know, I've been given these conditions. It's pressure, it's stress, and I'm not performing well under this stress and pressure. Therefore, I don't believe that I'm actually a seasoned trader, because I believe a trader should be able to trade profitably and consistently across all kinds of market conditions, no matter the stress, the pressure, or whatever. I haven't been able to achieve that yet, and that is clearly visible by my performance on the Funded Trader Challenge. Like, these results don't lie. This is actually how I trade based on these conditions and situations. And again, I don't want to make excuses, but there's a lot of shit happening in my personal life, which is I'm not going to go into details about it. I think after I've passed this challenge I will, but for now I'm trying to keep it clear out of my mind, and my only focus is the charts, my analysis, and that's it. This challenge, this is like my life until it finishes. And don't worry, like, once this challenge finishes, I'm still going to be making this kind of content. I really want to keep myself accountable, and I really want to show you guys like my trading journey, because that's the whole point of this channel. Like, I want to show you like everything, and I want to keep it as clear, concise, consistent, and in-depth as possible. Now, I'm going to leave it there. I think I've been talking for a while. My roommate is actually blasting music at the moment. I don't know if you guys will actually be able to hear that. But yeah, I'm going to sit here. I'm going to wait for this trade to play out. If it doesn't, it doesn't. But if it does, I will make sure to let you guys know. So I'm going to leave it here. I hope you guys enjoyed this video. It's mostly psychological related. I've shown you all my setups, this and that. I think it was a very good video, if I'm going to be completely honest. So if you want to stay up to date with how I'm going, my trading journey, this and that, be sure to subscribe. If you like the video, smash the thumbs up. You don't have to if you don't want to. I'm not bothered, but do whatever you want. Chuck me a comment if you have any questions, and that's it. I'll see you guys in the next one.